As I mentioned, Adobe stock is down 23.81%, almost 24% year to date. And as the stock market rallies today, Adobe stock is only up 0.42%, while broader market indices are up closer to 2.5%, and 1.6% for the S&P 500 index. Adobe over the longer term has demonstrated excellent revenue growth, but investors are becoming more concerned about competition in artificial intelligence. Investors and Wall Street are not confident that Adobe is making the right investments in artificial intelligence to withstand increasing competition from competitors that are incorporating AI more rapidly and more comprehensively. Adobe's revenue has grown from $4.8 billion in 2015 up to $23.2 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 17.5%. In recent quarters, Adobe's revenue growth has accelerated, but it's still below the rate of the compounded annual growth rate over the previous decade, so its growth rate is slowing down. Still, the company is growing roughly double digits. The industry overall is growing, while admittedly Adobe is losing market share to companies like Canva and Figma, who are incorporating AI and attracting users, especially beginner users, more quickly than Adobe is. That being said, Adobe has increased its revenue and its business prudently in a way that's expanding its profitability robustly. The returns on invested capital have increased from 14.1% in 2016 up to 26% in the most recent trailing 12-month period. This effective allocation of capital gives me confidence, or reasonable confidence, in the company's management team to adjust to the challenges it's currently facing. Adobe has the capital, the cash flow, and the profitability, the profit margins, the customer relationships to invest in research and development to meet the current challenges. It's a matter of investors and management doing so effectively, not getting caught up in the AI hype and just over-investing just because that's what investors and Wall Street are looking for. So you're getting the lower valuation, which means it has more of an upside because you're buying it at a lower price, and so it has the upside there because of the lower valuation. Now, this is just one perspective on valuation. I also calculate a fair value using my proprietary discounted cash flow valuation model, which calculated a fair value, and I updated this today for Adobe at $418 per share. The current market price is $338, trading near its 52-week low, which is $330. So whether I look at valuation on a forward PE basis or whether I look at valuation on a discounted cash flow basis, Adobe stock looks significantly undervalued. Click the link below to watch the full video.